So we've been getting a lot of questions about where is this market going in 2023. So I've got 5 predictions I want to share with you guys. Prediction number 1, home sales will fall to the lowest level since 2011 with a slow recovery in the second half of the year. And now notice how I said home sales and not necessarily home prices. We expect about 16% fewer existing home sales in 2023 than last year, with would-be buyers just pausing due to affordability challenges, including high mortgage rates, high prices, and persistent inflation, and a potential recession. People will only move if they need to. So that's fewer home sales than any year since 2011, when the US was reeling from that subprime mortgage crisis, and a 30% decline from last year, during the pandemic home buying boom. When buyers don't want to buy, sellers don't want to sell. So low demand plus the lock-in effect of homeowners with ultra low mortgage rates staying put, meaning new listings will continue to decline year over year during the first half of next year. Another possible scenario is existing sales will decline only about 12%. And that could happen if inflation consistently slows faster than expected, allowing the Fed to slow its pace of rate hikes and leading to quick mortgage rate drops. But if inflation persists, sales volume will decline. All right, prediction number 2. Mortgage rates will decline, ending the year below 6%. So we expect 30-year fixed mortgage rates to gradually decline to around 5.8% by the end of the year, with the average 2023 homebuyers rate sitting right around 6.1%, which remember today it's 6.5%. So the Fed's, series of interest rate hikes, should cause inflation to continue slowing, which is likely to bring mortgage rates down. But how quickly inflation and rates come down depends on a number of factors, including the resilience of the job market. And if inflation cools faster than expected and the job market moderates, rates may decline sooner, dropping to 6% in the beginning of the year, maybe then settling around 5.8% for the rest of the year. But if inflation proves stubborn, rates are likely to stay elevated for several months and decline slowly before the end of the year, just below 6%. So house hunters may need a higher credit score or lower debt-to-income ratio to qualify for a mortgage, as lenders tighten up credit standards, due to rising unemployment. But that said, those that do qualify may pay less in closing costs as lenders and sellers are offering products to attract customers during this slowdown. Prediction number 3, home prices will post their first year-over-year decline in a decade, but we will avoid a wave of foreclosures. Because our last housing crisis was so recent, there's a notion that any recession will automatically trigger like the meltdown we saw in the housing and mortgage crisis of 2006, 2008. I've mentioned this before, but the fundamentals of our real estate market is completely different than it was back then. We expect the median home price sale to drop around 4%, which is the first annual drop since 2012. But prices would be falling more if it were not for a lack of homes for sale. And we expect new listings to continue declining through most of the year, keeping total inventory near historic lows and preventing prices from plummeting. Prices remaining elevated above pre-pandemic levels also mean a wave of foreclosures next year is highly unlikely. Very few homeowners are likely to see their mortgages fall underwater, even with next year's anticipated price declines. And that's because the homeowners who've had their home for at least a few years have fixed low mortgage payments and plentiful home equity, after values have skyrocketed during the pandemic. And even those who bought recently, near the height of the market, are likely to have made a sizable down payment and therefore have some equity to land on. But more importantly, the job market, continues to remain resilient. Even if there is a recession, economists expect a mild one with a small increase in unemployment. So it's unlikely that many homeowners will fall behind or on their mortgage payments. All right, prediction number 4, rents will fall, and a lot of millennials or first-time home buyers may continue just to rent indefinitely. So we do expect asking rents to post a small year-over-year decline by mid-next year. There is a lot of new construction going on in the multifamily space. In fact, we are at a 50-year high for multifamily construction. So this means hundreds, if not thousands of new rental units will be available next year. Another factor is, a reluctance to sell. So many homeowners will rent out their homes rather than sell because they don't want to lose their ultra low rate. So I think there's going to be an influx of single family homes that are coming onto the market and thus pushing rents down. All right, now my last prediction for the year. This is going to be the best time to buy, I think, in the next 3 to 5 years. Even though there's a lot of doom and gloom in the media and the buyer sentiment is at the lowest it's been in almost a decade, these are the markets that savvy buyers and investors look for long-term growth. So if you're someone that has a desire, and ability to finance a property right now, I believe you'll be getting some of the best incentives we are going to see for the next 3 to 5 years. The market is made pretty simply of supply and demand. Right now, demand is weak and supply, is up. As more and more builders reduce the amount of homes they are going to construct, or pivoting to build apartment complexes for this influx of renters, we are going to be perpetually left with an undersupply of existing homes for sale. And when rates do come down, which they do, there will be a large pent-up demand of buyers, who have either been renting and tired of throwing away $20,000, $30,000 a year to the landlord, and put off, moving up, or down to their next property, who will re-enter the market. So I think what's going to happen next year is we're going to have sales that are going to be pretty flat, but there will be a rebound at the end of the year. And I think from there on, we're going to see a much healthier market as a whole. So thanks for watching my market predictions. As always, I'm here for any questions.